Now it's time for the morning trade, and we turn our attention over to Target, the store, the company, the stock, reporting the earnings tomorrow morning. And there was a time people loved Target, then not so much. So let's check it out here. And we have Schwab Network contributor J.D. Durkin with me here, taking a look at this name, which year to date is down 27%.
A lot of downward pressure to your point here, Nicole. Sometimes investors really love the stock, sometimes not so much. I think tomorrow's earnings for this name is a huge weather vane or a bellwether moment, not just for Target, but really for the big box retailers, arguably overall, as everyone in this industry continues to contend with the threat of higher cost imports and what that means for the business. It's a stock that sees incredible volatility oftentimes after earnings. According to options markets traders, Nicole, they're expecting a move of 9.5% either up or down because of how high that volatility is. Expectations here slated to be nearly flat here from the revenue side, 24.3 billion, and adjusted earnings per share of 165. To the point of how aggressively it swings in November, we had a big gap down in Target shares after earnings of 15%. You go back to March of 2024, a big gap up of 10%. And then, of course, a lot of big box retailer analysts remember what they call Black Wednesday. That was Wednesday, May 18th of 2022. Right as interest rates were going higher, the stock traded down 25% in a single session, its biggest drop since the infamous Black Monday episode in 1987. A lot of big questions here for Target. Can the entire retail sector effectively weather the worst of the tariffs back and forth? And I'm also going to be really curious to see, does Target issue similar words of caution that we heard from Walmart last week, which of course differs from what we heard from Home Depot today. Walmart on the one hand saying we're in a position we expect to pass down those costs on to consumers as soon as this month. Home Depot singing a little bit of a different tune earlier today. Going to be fascinating to see which of those two camps Target falls in when we hear more tomorrow.
Yeah, and I'm seeing a mixed bag. Telsey Advisory has a 130 target with an outperform. It was lower from 145. But that's a far cry what we're hearing on the other side. I saw Deutsche Bank with an $84 target. So that's terrible. No one wants that to happen, especially since it's already fallen off so much. So even Wall Street seems somewhat mixed. I see holds and equal weights. I'm not seeing a ton of buys at this moment.
The average one-year price target is still at about 115. That would be a bump of about 15 to 17% from where it is. But you make a great point to look at its earning or its performance so far year to date, down more than 25%. Very tough, not the exact business model, not the exact average consumer you see out of a Walmart. But when you have Walmart shares up year to date about 8 to 9%, it does really show that contrast. And I think it's going to be a really fascinating slate of earnings, especially in terms of potential downward pressure on consumer spending that we'll hear a lot more for in the coming days.
Yeah, there were concerns about customer traffic. This was something that UBS was writing. So, is the consumer alive and ready to go there and spend? They said they need to stabilize the market share, define the positioning in the market, demonstrate their sustainability on profitability. I mean, Walmart has so much in groceries. That's another part of it. Target has some, right? Or no?
Target has some, yeah. And Walmart talks, I think, a little bit more about it because Walmart always stresses the fact that they're seeing more six-figure income earners shop at Walmart for their necessities. I don't necessarily hear that same tone of optimism when I've listened to Target earnings the last few quarters. We also don't want to ignore this is a politically dicey moment for CEO Brian Cornell, I think, because the company has come under a lot of pressure for scaling back its DEI programs. And as we saw with the case of Walmart, if you maybe say the wrong thing in the minds of the Trump White House, you might be on the receiving end of some criticism there, which I'm sure any of these retailers would like to avoid.
Wow. And we know yesterday we were talking a lot about Trump and saying that Walmart should eat the costs. And Besson said that Walmart does plan to absorb some of the higher costs after making billions, et cetera. Good to see you, J.D. Durkin. Thank you for that. We appreciate it. Tim Biggam is with us, options strategist at Buy Alerts. And you're taking a look at Target, which has fallen off those highs. Well, how would you go about an example trade today with it under $100?
Yeah, and as you alluded to, under 100, this stock has absolutely been taken out to the woodshed, but held that kind of $90 level down below. So that certainly looks like a solid floor, at least going forward here. I think the stock on a valuation basis certainly getting cheap as well, trading at just over 11 times price to earnings, the lowest in 5 years. Price to sales under 0.5. And as you were talking about the comparative to Walmart over the past year, Walmart's up about 50%, Target's down about 35%. So on a comparative performance basis, certainly vastly underperforming Walmart and the overall stock market as well. So I'm just cautiously bullish here, looking really for a retracement back towards that kind of Liberation Day gap down we saw on most stocks in early April around that 104, 105 level, which also equates to that expected, option market maker move of, 7 to 9% that was talked about earlier. And I love the term structure, Val, able to sell 130 or so IV this week. And then hedge in the June traditionals with a mid 50. So I'm just going out buying the June 20th 105 calls, selling this week's 105 calls, paying a little bit over $1 here. So like it on a cost basis as well for a stock that's approaching $100 again. Not looking for fireworks here, just looking for a move back towards that kind of, Trump tariff gap here post earnings. I think valuation supported. I think the fact the stock has underperformed both, competitors and the market supported as well. So unless they absolutely miss by a big margin, I think we might see a relief rally and capturing a very nice term structure vol as well.
Interesting. So what's your big picture thought here? Yesterday when Moody's lowered the U.S. one notch of the 21 notches, I mean, it's, and joined Fitch and S&P, Besson saying that was a lagging indicator at this point. Your thoughts on the markets overall? What do you look at here in the market action?
Yeah, I think, a couple things. I think certainly interest rates initially, rose fairly sharply, immediately were met with, a lowering of yield. So as you were talking about earlier, Nicole, the 10-year kind of stuck around that 4.5% level. Valuations on stocks generally getting expensive here, though, towards those extremes. S&P 500 price to sales now back at 3 times, which the only 2 times it got up there met a 20% or so pullback in the stock here. So I think complacency may be getting a little too complacent here, if you will. So I'm just looking for a pullback. I think the 6,000 level will be tough to get through for the S&P in the current market environment. So stocks like Target that are, very beaten down, comparatively cheap, I think will actually be where people kind of rotate into getting out of those high growth names that have led the charge here into more of the value stocks to kind of hide out from maybe a slight pullback in stocks.
All right, Tim Biggam, option strategist, Buy Alerts. Thank you so much. Great to see you, Tim. Thanks.
You bet. Anytime, Nicole. Take care.